Well, the U.S. China trade war hit a pause this week just as the increased tariffs would have really hit. But even with a trade truce, that doesn't necessarily mean consumers can avoid higher prices. Fox 5 team's Dana Fowle is here to explain why.
Because the decisions that are made by the White House the first week of April are now hitting this week. That's what it is. And it's a change of course that really won't kick in for a few weeks. Think of it this way, if you will. If you want to get the best price for a July vacation, you don't wait until July to plan. You budget, shop, and buy now. Well, that's what retailers did weeks ago. And this is how experts say this will play out.
What we see here is a cliff of freight not being sent to the United States anymore from anywhere in the world.
Shipments to the U.S. dropped the first week of April when President Trump announced steep tariffs with one of our main trading partners, China. Retailer orders dropped to 50% in a two-day period and have not gone back up. And those half-full containers are now at our shores.
And so now, even if you say, hey, let's go back to everything how it was the last week of March, normal tariffs type of situation, there's an air bubble in the big pipe now from East Asia, specifically China, to the U.S. that usually is full of goods.
Kyle Henderson is CEO of Vision, which tracks global trading right down to individual containers.
So even if you started ordering again today, if you started booking freight again today, you still have this 4 to 6 week long air bubble that's going to show up.
Large companies can eat the losses by rushing full orders here on airplanes, but small mom and pop shops can't because, well, it can cost up to 100 times more. This is a very blunt assessment.
Small companies are going to get hosed. This is like for these small businesses, especially if their goods are coming from China, this is like their mortgage payment doubled overnight if they need to order more inventory.
And just because there's a pause in the trade stalemate, business still has to plan out for the what ifs. Kyle Henderson said he's been tire shopping and the salesman told him this is why the price has doubled.
We're going to be charging you about twice what we were charging before for labor and anticipation of how much the costs are going to be going up.
Vision is tracking the same price spikes in apparel and electronics. So, whatever happens, tariffs on, tariffs off, you have to plan, shop, and budget for the worst-case scenario to protect yourself.
Store shelves will have less on it, less variety, less volume in the next handful of weeks, potentially through the rest of the summer.
Now, what those dips in supplies mean is that dock workers who unload the containers might be affected, truck drivers, storage facilities, summer workers who might stock those shelves. There could be a ripple effect for summer employment. So if the kids say, I can't find a job, they might not be able to.
Yeah, really may be the deal.
Yeah.
So let's look ahead a little bit to Christmas. What does this mean for that?
High demand items are generally ordered in the summer, sometimes as early as May is when they do this. So the uncertainty, it has to be settled soon or the supply chain will be affected. The president himself said, plan that you might have to a little less to buy this year. And those were basically his own words. So plan accordingly.
Mm-hmm. Okay. I'm glad you tempered expectations a little bit because I think that is our first instinct. This means.
Yeah, I mean, you can hit pause on this, and that's good. That's a good thing. But these retailers are still looking at, okay, what's next? Mm-hmm. They don't know, so they are planning for uncertainty.
Okay.
So it still leaves this sort of bubble of what the supply chain is going to do. And we saw what happened with uncertainty during COVID, and we're hoping, I think businesses are hoping not to replicate that supply chain issue. We'll see.
Dana, thanks.